We're speaking with Moritz Kraemer. He is head of the European, Middle Eastern, and African sovereign ratings for Standard & Poor's. Moritz, just before the break, we were talking about the implications of this permanent bailout fund that the EU is trying to structure. That's why they're meeting in Brussels right now. And you were saying that the way it's envisioned, you have some concerns about certain credit ratings because the EU fund, this permanent bailout fund, would be the senior creditor. What does that mean? Does that mean that downgrades are imminent? Further downgrades, not just of Portugal perhaps, but maybe Greece and Ireland as well, and others, because of the fact that the EU would be first in line as a creditor?
Indeed, we have spelled out since late November, actually, when the Eurogroup for the first time proposed this mechanism, that we're watching these issues, and for those sovereigns that we deem are the most likely candidates for borrowing from the ESM, we have the ratings on credit watch, and once we have the full details, which we expect to emerge within the next 24 hours, we will then reconsider the next move. So the credit watch is negative, and if these concerns are indeed confirmed by the decision at this council meeting, we would reassess the ratings, specifically of Greece and Portugal, which we think are the most likely potential customers of the ESM going forward.
If that is the case, Moritz, what are the implications for the banking system? Is the EU any closer or perhaps further from allowing this sovereign debt crisis from turning into a banking crisis?
Well, I think there are different sets of crises developing in different countries. In Portugal and Greece, for example, we have a sort of a more old-fashioned fiscal budgetary crisis, whereas in Ireland the crisis started in the banking sector and then spilled over into the public finances of that country. So what we're seeing possibly in the last few weeks actually is that there is more differentiation in the marketplace, and sort of a few months ago we would have talked about Spain as well in this context, but the market seems to have taken the view that Spain is sort of in a different category and not immediately threatened by the same challenges as Portugal, for example, is, and that's been our view as well, and that's why the rating of Spain remains significantly higher in the AA category.
Moritz, thanks so much for joining us here on the Inside Track with those insights. Moritz Kraemer, he is the head of European, Middle Eastern, and African sovereign ratings for Standard & Poor's. He was with us from Frankfurt.